Hello everybody. Now in my live seminar where I did the trading system, I did a really crap job of support and resistance. I pretty much forgot about it, like to the extent where we were doing the trading backtesting examples and just completely forgetting about support and resistance. Now while that particular video was not designed to even present a system that worked, although it kind of did, and was more meant to be about the process of creating a system, I realized that my support and resistance was terrible, and people have asked me, can you please explain support and resistance a bit, because you're really shit on your live video seminar. So here it is. This is what I'm going to do about support and resistance. So it's going to be three parts. What is support and resistance? How does a human identify it? And then thirdly, can we break down the human decision making and then explain it to a machine? So even if you're not an algo trader and you're not going to want to be coding in support and resistance so a machine can see it, it is still a good exercise for how to break down the thinking and what a human is looking at when they're looking at support and resistance, because it might help you in identifying the support and resistance levels. So the first thing, really quickly, we'll go through what is support and resistance. Well, the first thing is, traditionally support and resistance has been used in stocks. So traditionally in stocks you buy a stock and then you own it and then you sell it. So most of your positions are going to be long. So traditionally the support level is something that supports the price of the stock, supports your trade. So if the price is going down, it's a level that it won't go below. And then resistance is when the price is going up, but it hits a certain level and doesn't seem to break through. There's lots of sellers there. So it's a resistance to your trade going better or the price going up. Now in Forex, we trade ratios, not prices. So while we talk about long and shorts in Forex, it's only in relation to the first quoted currencies. If you're long on the Euro USD, you're buying Euro, selling USD. If you're short, you're selling Euro, buying USD. Now, that's just a ratio. There's no good or bad. It's just which one you're buying, which one you're selling. So when that comes to support and resistance, if you're short on the Euro USD, technically resistance is below and support is above, because if you're short and the price is going against you and you get support for your position, it's hitting a price above the current price and stopping it going against you, against your short position, and resistance is stopping it going further short or further down and resisting your trade going better. So support and resistance depends on which way you're moving. It's all relative to your position. But for the sake of simplicity here, we'll talk about support and resistance, assuming that all our positions are going to be long. So now let's have a quick look at this chart. So it's the Euro USD chart, 1 hour, zoomed out so that we can get a good look at the market. So let's have a look at what we're meaning by support and resistance. So we'll start over here at the beginning of the chart history, which is in the beginning of June, and it comes up and then it sort of pops around this level for a bit, and then something happened here and it's dropped quite markedly, and then it sort of went around this level, came up a bit, down, up, big drop, up and down, up and down. So let's have a look and see if we can see areas where the price resisted going higher or stopped going lower. So right over here at the start, we can see that this kind of level, the price stopped going up in this section, and about here it stopped going down. And then we can see this next section here is another sort of ranging section where the price went or didn't go above this price and didn't go below this price. And then it went into another section just here. So what we're looking at is the bounces. So it went up, it bounced, came down, it bounced up, bounced up, bounced up, bounced, and then the support was broken. So the support means the bottom part of this range was broken. And then it bounced around here, and we can see that down here is support. So it's come down here a few times, and there's been buyers, so it hasn't gone any lower, and then up it came above here, and then back down to support again, back up, and then we could say there was resistance somewhere through here, but it wasn't particularly strong. We can't see a great strong resistance like we could see down here, where at multiple times on the same level it didn't go past. So then it's come up, it's come back down, and again it's kind of up and down in a range through this area where you'd probably say about this point it hasn't gone above. So after the initial push up, it's come up once, twice, 3, 4 times, and it hasn't gone above this price, and then it's eventually gone down below this level here, and then it's come back up and again gone into sort of a pattern in here that is about the same level as it has been back here in July through August, maybe a little bit lower, but back to the sort of the same level. So that's what we're looking at with support and resistance. Now we want to see, can we identify any sort of areas that are consistently holding throughout this whole chart that might hold again in the future. So we don't know for certain this is going to happen. This is just a best guess scenario. So let's put some lines in. So the first one that we're going to see is this middle one here is a good one. You can see it bounce 1, 2, 3, 4 times off these points. So let's put it there and we'll have a look. So we definitely know that there was some resistance here. Now we go across here to the left, and we're seeing that at this point here there was sort of a general support of the line here. Now an important thing with support and resistance is, like I was saying, that they're often interchangeable, and there's a saying that support becomes resistance and resistance becomes support, and we're kind of a little bit seeing it here. So at the start here it was support, where it supported the price and stopped it going down, at least until it broke through dramatically, and then we come back over here and this same area is becoming resistance. So you can probably even draw a second line in here. We've sort of got this area in there between those two lines is a support and resistance area, because we can see the price is reversed along there quite a few times, and then we come over here to the right and we see it again. Didn't quite make that bottom line that we've drawn, but it was approaching it. And again over here we see that more recently the price is approaching this point and it's come back down. Again, didn't quite make it, but if you were looking to make a short trade and your system over here indicated on the 1 hour chart that you could make a short here and you had a nice long downside to look forward to, then you could replace your stop loss above here and get a decent risk to reward ratio, knowing that you've got your position above a quite a solid support and resistance line. Now let's have a look now at the bottom. So we'll grab another line here, and you can see that through this area we've gone bang, bang, bang quite a number of times on the support, and it's held. So we'll put the line in there and have a look. You come across, you see again the price that's bounced off there. And again, it had a little bit of a resistance here, but there was far too many sellers, and it's gone plummeting down after going through the support and resistance. And then it's recovered, and again, sort of it's hit this point here, and it has resisted going straight through it. Like, this was quite a strong move up, and then it's got a bit busy here trying to break through. There's a bit of a bulls and bears battle, but the bulls made it, came up, it's come back down to this general line, and it's what was over here, it was a support, broke through the support, became a temporary resistance that did get broken, then it became a support again, it's gone up, it's hit this resistance here that started off again as a support, became resistance, became resistance again here, it's come back down, and it's held its support again twice, it's come back up, and it's hit a resistance level, or reversed under the resistance level anyway, but you could use that for a trade. So we'll just draw a second one here, because although this one is a lot up here, we drew it quite a wide one. Down here, I would say that we've got a level, probably turns out looking like it's about the same distance. So we can see that the euro has been in that range for this whole time, apart from when it's popped up and popped down. So it's come up, down, up, down, up, down, broken through, came back up, down, up, down, up, down. So, is there anything else we can see in this? Now we've got some very strong points here. Are there any other points of interest? Sort of through the middle here, in the middle of the channel, there's a little bit of a support and a resistance happening. It's not as dramatic as these two, which are keeping the whole pair range bound in this area here, but I think a human might sort of find a point somewhere about where I just drew this line in the middle here. So let's have a look here. We've drawn this line here in the middle. So at the start it seems like there's a little bit of a support, but price has bounced off it. Then it's gone well away up to another one. It's came back down through this quite harshly. However, it's come back up and found resistance there. And then again through here, it's broken up through it, but there's quite a bit of price action through here. And then it's gone to drop back down, and again found some support here. Again there, it's come back down, popped back up off support initially, but then plummeted through it on the second go. So clearly this middle line isn't as strong as these other two extreme ones, but there seems like there's sort of some action happening in the middle, and we see it along through here where the amount of bars surrounding this is quite large. Here it isn't, but through here we're seeing it, this point here, this point here. You could argue that this one's sort of approaching it, and again we're getting sort of human-like, so you could say that here is near it. So it's you kind of see what you want to see when you're just putting these lines on a chart. We're seeing some resistance through here, so it's trying to come through a few times here, and it's failed, and then it's acted as support through here. So I think there's something happening at that line anyway. Again, like I said, not as strong as these bottom and top ones, but you could probably make use of those three lines in your trading. Now, we've just gone through and humanly identified it. So that's all well and good, but how do you get a computer to see that? Computers need exact rules and can't just sort of see patterns the way that a human can see them. So we need to have a little bit of a think about what it was we were doing when we were identifying all these different points, and thinking, can we make some mathematical rules that we can explain to a computer and a computer can look at and pick up these patterns that we identified as humans. Humans, this is probably sort of one of the areas where humans have a significant advantage over robots. So we're going to go through, and these are the two ways that we use to code in support and resistance into our robots. So the first one is kind of a zigzag. Now, I'm not sure if these settings are exactly the same as the ones that we use in the robots. It was just the default of the indicator that I had. But what we're looking at is, for those that don't know what zigzags are, we'll just zoom in for a second so that we can have a closer look. Zigzags basically find tops and bottoms. So it's finding a bottom down here, and then this is the next local top, and a bottom and a top, and you get the idea. Up, down, up, down, up, down. So all the way through, it's telling us what the near maximum is and then the near minimum. And the points that we're interested in is at the turns. So the point down here, the point there, the point here. So we're looking at when either buying momentum or selling momentum turns. So we look at this case here. There's a bit of selling. There's a big wick on this candle right in the bottom here, and then it goes along and goes up, and then it reverses and goes down. So it's just finding these local tops and drawing them in. And then as we zoom out, you can see it goes up and down, up and down, up and down. So the computer ends up with all these points. So it clears out a whole heap of data points for the computer. It just says, where has the price reversed? These are all price reversals. So we gathered all these in a big database, and we see the price reverses there, 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 and there, and there, and there. And so the computer, it doesn't do it like a human does, where it says, okay, now we can draw a line here because lots of these reversal points occurred around it. It puts it into a big array of numbers, so a big sort of matrix or table of numbers. And then it looks at numbers that reappear all the time. So it's looking at, where does the market reverse over and over and over and over and over again? At what points does it do it? And then it uses that to mark particular points of interest in the price. So we might have one there, and then we might find another one that sort of finds a lot of ups and downs, say, and I'm guessing here, this isn't exact, so we can see a lot of sort of reversals happening around about this line. And then you see a lot of reversals happening around about here. And then the computer is looking for these areas where there's lots of price reversals. So we just jump back and compare it, and we can see that there's not too much difference between what we were looking at before as a human and what we can sort of explain to a robot. Granted, I'm a human placing them in, and all of 5 minutes ago I was placing them in on the chart before, so there's inherently bias in my placing of these, but that's effectively what the computer would do. The computer as well would probably also identify points somewhere around here, because there's quite a lot of price action occurring in this area where it's going up and down, so it would probably find a point down here somewhere as well, without exactly knowing how it would do that. So that's the first method we use, and we actually use two methods to look at these, to find these interesting price areas, and then we combine them together and then use sort of sampling probability theories and distributions to get these resistance areas, so to speak, and also to sort of identify which parts of the next ones, or the next thing I'm going to show you is important. So the next one, what we do is actually, I'll show you this graph first, because this graph explains it. So what this is up the left-hand column is the amount of times, the amount of bars that have occurred at these particular prices. So this is a bit old, this is just one that I found from a while ago, so the euro price is different to the current price. But at say 125.5, there's been, I don't know, 75 bars that have occurred over the sample period in the sample period at 125.5. At 125.9 or 8 or whatever this value is here, there's been quite a few, 10. And then it jumped up, there was a bit more activity, then a bit lower, then there was a lot of bars around 127. So a lot of bars around here, and then less bars at 127.4, went up a little bit, came back, and it dropped away at 128, and not much at 129. So we can see that there's kind of some range happening. So we've got a range occurring between here and here and here and here. So there's been a lot of price action in between this price, and then a lot of price action in between these prices. But then between these prices in here, there wasn't much action at all. So it got stuck here, and then it went over here quickly, and then it got stuck in here a lot. Let's take these off. So what we've just looked, what this graph tells us is activity in the price levels. So remember when we were first looking, and we were looking at, oh, there's lots of price activity in here, in these areas. So lots of times things happened in these areas here. So lots and lots of bars in this area, and then in this area. So basically the whole sort of area in here. And that's what we're seeing in this graph. Now, what we're looking at is price occurring lots in here, but not much out here, either side of these support lines. So the two things we're looking for as humans is price action on one side of the line, but not on the other side of the line. So taking it back to this, we're looking for when there's lots of activity on one side of the price, but not on the other side of the price. So where does that occur? Lots of activity on this side, not much activity in here. A little bit of activity, less activity, a lot of activity here. So much so that there's that drop there is probably as big as that drop there. So then we've got another bit here, and then it drops right away to this point here. So these points are points where there's no price action. The price quickly moves through here and gets stuck at these points. So what we're looking at is price where there's movement towards it, lots of movement in here, but then no movement down here. So those circles on this thing here are these areas on the chart down here. Lots of price in here, very little price in these areas. So this method, as an indicator, comes up with these lines. So this is all automated. This one is definitely the computer doing it. There's no me doing this one. So they're a bit hard to see, but I'll just leave it. We've got I'll draw them so that they're easy to see over the top. The computer's put a price there. The computer's put a couple of prices in the middle here. The computer's put another one down here. And then let's put a final one down here. So that's using this method, and the circles are put at points where, sorry, the lines on the graph are put at points where the circles are on this diagram. So let's jump back to the original one we did, and then the fully computerized one. So we didn't put one down the bottom here, but we put one down here, which is roughly where we put, so this is a computer, that's human. We put, they pretty much bang on. It's put an extra one just down here, but this point here is almost exactly the same. And then our top one, we've put a sort of a double sort of area along here, and the computer's found a single line almost exactly in the middle of that. So we'll jump through them again quickly so you can see. So this is the human one I did at the start, and then this one was sort of my version of what a computer would see, because it doesn't draw it on this indicator that I have. So it's a little bit biased because I drew it still. So we've got human, sort of a computer view of it, and then a second computer view. Now what we do is we put all these values into an array, and so this indicator indicators idea of where support and resistance is, and then this one's idea of where support and resistance is gets put into huge big data array of numbers, and then it looks at basically looking for when they agree. So this guy thinks that this is a resistance level, this guy thinks that around about the same place is a resistance level, therefore it must be a resistance level because the two of them found it. This one's put 2 lines in the middle here, this one's only put 1, so it would probably come out as 1. And then once we get these lines spat out to us, or spat out to the robot, then we identify is it long, is it short, by using this sort of value plus some other things that are sort of complicated when you're doing matrices and data arrays and calculating them. But the idea is that we've broken the human thinking up into its 2 sort of different modes of thinking about support and resistance, and explained it to a computer. So you can take that idea and apply it into your own thinking, so that when you're looking at support and resistance, you're thinking in the same logical manner as the computer. So we've got one that's looking at all the tops and bottoms and where lots and lots of tops and bottoms are being formed, and then we've got the second one that's looking at where there's lots of activity and then not much activity, and then drawing the lines based on that. So these middle lines will be similar to this up here, where there's still quite a bit of activity, but less than the surrounding areas. So I hope this has sort of improved your understanding of support and resistance, and maybe those of you who do algo trading might gain something from this, because calculating support and resistance proved one of the biggest challenges for us out of all the different coding things that we've done ever. And we really had to sit down and break down how humans think and calculate support and resistance, and then figure out ways to explain it to a computer. So hopefully in telling you how we explain it to the computer, a human's thought process, you can actually improve your own human thought process in identifying the support and resistance levels that are strong enough to hopefully hold in the future, and then you can use them as either take profit or stop loss zones for your trades. So until I see you all again, I hope all your pips are green. Fatso Wombat says goodbye till next time.